All right, Coinbase earnings crossing the wire just moments ago here, and revenue coming in shy of what analysts had been anticipating. $2.03 billion, $2.11 billion is what analysts had been estimating. Adjusted EBITDA beating estimates, though, at about $929.9 million estimated. EBITDA there, $971 million. Transaction revenue pretty much in line with had been estimated, but subscription and services revenue a little shy of what had been estimated. Now, for a company that you would think would trade pretty much in line with Bitcoin, that's not really what's happened this year. We have seen this stock pull back, even as we have seen Bitcoin recover to some extent. I do want to mention, though, we did see the shares gain about 5% in today's session, and that's after it agreed to buy a crypto options platform called Deribit. So that propelled the shares higher. So to put it in context, the pullback, Josh, coming after the boost that it got from announcing that.
Yeah, I know investors make a beeline for that subscription and services revenue, and that for Q1 comes in at 698. That's a bit light. The street was more closer to 703. I'm just looking for their Q2 call on that. They're looking for Q2 subscription services revenue between 600 million to 680 million, but that'll come up. And as well as, of course, about the big M&A news they made today, saying they have agreed to buy Deribit for about $3 billion.
Mark, I'm sure you're still sifting through the results, but I know you're a bull on this name here. But I am curious what you make of that revenue miss.
Yeah, well, first of all, thanks for having me. The miss is, in the big picture, really inconsequential, especially relative to today's news, where the company announced the largest acquisition in the history of the digital asset industry. And positioned itself to be an even bigger player among institutional investors. So what we're seeing right now in terms of the top line, and particularly subscription and services revenue, that is point in time. What we are thinking about is where are these numbers going to go once Deribit is actually part of the Coinbase family, and that's what's really exciting. So right now, if you look at subscription services, you've got custody, you've got staking, you've got the contribution of stable coins, but derivatives is really not a big part of that. And if we see the kind of institutional adoption of crypto that we are anticipating, a lot of those institutional players want to express their views in crypto via derivatives. And so now Coinbase, via Deribit, which is the largest player globally, is in a great position to do exactly that.
And Mark, I know, though, you make a beeline, as so many do, for that subscription and services revenue number. So the fact that in Q1 it did come in a touch light, 698, consensus was 702.5, that's not a concern for you?
No, it really isn't. Especially the trading volume side, we have the ability to track. Any analyst can track that on a daily basis. The reason why subscription and services revenue is so important is because the company is trying to become less dependent on particularly retail transaction revenue. And so the more that it can grow that number, the better. But again, this is a work in progress. If we are able to see the U.S. Congress pass and enact a market structure bill such that there's a regulatory framework and institutions feel much more comfortable participating in the crypto space, then the numbers with regard to staking, for example, custody, and now derivatives are likely to be much, much higher. So this, in our view, is really not about where they were as of March 31st, what happened in the first quarter of 2025. It's about where do we go from here. And there are some pretty exciting things on that front, especially, again, if we see that legislation passed so that everybody knows what the rules of the road are going to look like going forward.
At the same time, Mark, Coinbase still operates in the world that we all operate in, and it's a world where there are a lot of question marks right now, and they refer to that in their letter. They say macro uncertainty, including around global trade policy, is impacting consumer sentiment and may contribute to softer crypto trading markets and lower asset prices as we enter the second quarter. And I think that's been one of the interesting things during this first stretch of the year for underlying crypto prices, right, is that it wasn't a safe haven. Gold was the actual safe haven. The old school safe haven was the safe haven. And so how then does that affect Coinbase if there is more risk in the market and if it hits crypto prices?
Well, I think it's pretty clear, based on what we've seen recently, that the macro is still very much a factor as it pertains to all things crypto. With that said, it is pretty impressive that with the kind of market and macro uncertainty we still see right now, Bitcoin today surpassed 100,000 for the first time since January 20th. And so, clearly there is a bid there, just between two of the big players, BlackRock being one and Strategy, the former MicroStrategy, being another. They're buying up quite a bit more than the amount of Bitcoin that's produced in a given day. So the demand side is there, and we have not even gotten to the point at which institutions have seen the green light to really participate. So yes, the macro is going to be a concern. We saw that hit Coinbase shares over the last couple of months. But at the same time, the setup here going into the back half of 2025, in terms of the legislative initiatives, in terms of the potential to have institutions get involved in earnest for the first time, because of course, crypto is that odd asset class where retail investors have led the way in terms of adoption since crypto's been around for the last 15, 16 years. You bring the institutions into play, and the first step was really, the fact that the SEC approved in the U.S. Bitcoin spot ETFs. With that in place, we've seen 140 billion of those now. The next step is allowing institutions to feel comfortable entering into the space. And again, the way that these institutions typically want to express a view is via derivatives. And as of today, Coinbase is now in a position to be the leader in that space. That deal is supposed to close at the end of this year. So going into 2026, you could see a very exciting new revenue stream just at the time when institutions are getting the green light.
Mark, so I know you have a buy on this name, you're a believer, but when you're talking to your clients, Mark, and they say, okay, it's a buy, but what are the downside risks I need to consider? You say what, Mark?
I think there are a few things. I mean, just today, we saw that in the U.S. Senate, one of the two versions of the stablecoin bill was voted down by a single vote. It was 49-48. And ultimately, there's probably going to be some more horse trading that occurs before that story is over. But if we don't see that legislation passed that would enable the institutions to feel more comfortable, then this is still very much a retail space. Retail investors, as we've seen, are somewhat fickle as it pertains to crypto. And that translates into an awful lot of volatility. Volatility in the stock market translates into a lower multiple, typically speaking. This is why Coinbase is so focused on that subscription and services line. The more recurring revenue that is part of the story, the fuller the multiple on the stock should be, the better the stock should perform.